Today, we're covering a must-know topic for anyone interested in growing their wealth: how to invest in stocks, a beginner's guide to the stock market. If you're new to investing, the stock market can seem intimidating, but with the right knowledge, it's an excellent way to build long-term financial success. We'll walk you through the basics, what stocks are, how the market works, and the steps you need to start investing. From choosing the right broker to understanding key concepts like risk and diversification, we've got everything you need to know to get started with confidence. Today, we will talk about how to invest in stocks, a beginner's guide to the stock market. So before we get started, make sure to hit that like button. Also subscribe to my channel. Investing in stocks can seem intimidating, especially with all the financial jargon and unpredictable market swings. But with a solid understanding of the basics and a thoughtful approach, you can navigate the stock market with confidence. The key to stock market success is to have a clear plan and avoid common beginner mistakes. In this guide, we'll break it all down in a simple, easy-to-understand way so that you can get started on your investing journey. What's a stock? Let's start with the fundamentals. What exactly is a stock? When you buy a stock, you're essentially buying a small ownership stake in a company. This means that when the company does well, the value of your stock increases, and you can potentially make a profit by selling your shares at a higher price than what you paid for them. On the flip side, if the company underperforms, the value of your stock may go down, leading to a loss if you sell your shares for less than what you originally paid. Stocks are bought and sold on stock exchanges like the New York Stock Exchange, NYSE, or the NASDAQ. While the idea of owning a piece of a big company like Apple or Google might sound exciting, the stock market is much more than just a place to trade popular tech stocks. There are thousands of companies from different sectors: energy, healthcare, retail, finance, each offering different opportunities for investors. Getting started with stock market investing. Now that you understand what a stock is, how do you actually start investing? The first step is to open a brokerage account. A brokerage account is like a bank account that allows you to buy and sell stocks. Do some research to find the one that best suits your needs as a beginner investor. Once you've opened a brokerage account, you'll need to deposit money into it. Start with an amount that you're comfortable investing, and keep in mind that this is money you should be willing to leave invested for a long time. The stock market tends to go up over the long term, but there can be short-term dips, so it's important not to panic if your investments lose value temporarily. The importance of research. Before you invest in any stock, it's essential to do your research. This is where many beginners make mistakes. Don't just invest in a stock because you've heard good things about it or because someone else recommended it. You need to understand the company's business model, its financial health, and its growth potential. One of the best ways to start your research is by looking at a company's financial statements, which are publicly available for most publicly traded companies. These statements include the income statement, balance sheet, and cash flow statement. While this might sound overwhelming, there are plenty of resources online that can help you understand how to read financial statements. Diversification. Don't put all your eggs in one basket. One of the most important principles in stock market investing is diversification. This means spreading your investments across different companies, industries, and even asset types to reduce risk. If you invest all your money in one stock and that company performs poorly, you could lose a significant amount of money. But if you diversify your investments, a poor performance in one stock won't have as much of an impact on your overall portfolio. An easy way to achieve diversification as a beginner is by investing in index funds or exchange-traded funds, ETFs. These funds track the performance of a group of stocks, such as the S&P 500, which represents 500 of the largest U.S. companies. By investing in an index fund, you're essentially buying a small piece of every company in the index, which helps spread out your risk. Understanding risk and reward. It's important to understand that all investments carry some level of risk, and the stock market is no exception. While stocks have historically delivered higher returns than other types of investments such as bonds or savings accounts, they can also be more volatile. As a beginner, it's important to assess your risk tolerance before making any investments. Risk tolerance refers to how much risk you're comfortable taking with your investments. If you're more risk-averse, you might want to focus on blue-chip stocks, large, well-established companies with a history of stable performance. If you're willing to take on more risk, you might consider growth stocks, companies that have the potential for high returns but also come with more volatility. Another important concept to understand is the risk-reward ratio. This refers to the potential return you could earn on an investment compared to the level of risk you're taking. Generally, higher risk investments offer the potential for higher rewards, but they also come with a greater chance of losing money. On the other hand, lower risk investments offer more stability but may not grow as quickly. The long-term approach. One of the most common mistakes new investors make is trying to time the market, buying and selling stocks based on short-term market movements. This approach rarely works and can lead to significant losses. Instead, it's better to take a long-term approach to investing. The stock market can be volatile in the short term, with prices rising and falling based on factors like economic news, political events, and investor sentiment. But over the long term, the market has historically trended upward. By investing with a long-term mindset, you can ride out short-term fluctuations and benefit from the overall growth of the market. Reinvesting dividends. Another powerful way to grow your wealth through stock market investing is by reinvesting dividends. Many companies pay dividends to their shareholders, a portion of the company's profits that are distributed as cash payments. Instead of taking these dividends as cash, you can choose to reinvest them by buying more shares of the stock. Over time, reinvesting dividends can significantly increase the value of your portfolio. This is because you're essentially compounding your returns, earning returns on your initial investment as well as on the additional shares you've purchased through dividends. Keep emotions in check. Stock market investing can be an emotional roller coaster, especially when markets are volatile. It's easy to get caught up in the fear of losing money when stock prices are falling or the excitement of making quick gains when prices are rising. But making decisions based on emotions can lead to costly mistakes. One of the keys to successful investing is to stay disciplined and stick to your plan. Don't let short-term market fluctuations dictate your decisions. Remember that the stock market is a long-term game, and even the most successful investors experience temporary setbacks. The key is to remain patient and focused on your long-term goals. If you find yourself getting anxious about market movements, take a step back and remind yourself of why you're investing in the first place. Focus on your financial goals and the progress you're making, rather than getting caught up in the day-to-day ups and downs of the market. Investing in the stock market can be one of the most effective ways to build long-term wealth, but it's important to start with a solid understanding of the basics. By setting clear goals, doing your research, diversifying your investments, and maintaining a long-term approach, you can navigate the stock market with confidence and increase your chances of financial success. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.